All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic weekend. Here we have the market opened up about 13 points higher. It's sitting about 10 points higher right now. It's given up some of its early on gains here and really not doing a heck of a whole lot, but some interesting elements here. And, this morning, as I kind of looked across the board, and it's Monday morning, you know me, I just don't make a lot out of Monday morning. I try not to make any trade decisions on a Monday morning. Hindsight will probably tell me I should have done that this week with FedEx. But, bottom line, I don't like making decisions on a Monday morning. A lot of times there is a higher chance of a misread or of a signal not really having as much follow through. And as I look at the market and I look at the gap up this morning, okay, great. It was announced to U.S. President Trump on his Twitter account, the stuff with China and everything else, which has been the driver here. But we continue to see it, drive things higher, but with diminished returns. Diminished returns overall in terms of, the market appreciation. And, me, it's one where I believe the downside potential is greater than the upside reward in this market, but all of the signs continue to point higher. We haven't seen any signs come in to say, hey, you know what, lower is going to be the case for the market in general. But one of the things, if you go and look past the last year, when the market's been on a little bit of a run or made some moves, it tends to have this gap up before it pulls on back. And sometimes that gap up has a 2 to 3 day follow through. But, there's a gap up before the pullback, and we see that everywhere over the course of the last year. Even right here, gap up before the pullback. Right here we get the gap up and only a 1 day pullback. But, we didn't get a pullback last week after the gap up, right? We didn't get that. But now we're looking at another gap up here. This is just starting to get to a price level where, fund managers may not feel as comfortable chasing. They're not seeing the bargains, right? There's not as many bargains out there as what there have been. So, a little concern. We see the gap up and maybe fade, but, no real sign of that here just yet. The big area that kind of drove things higher this morning, or one of the areas, are things like an AMD, right? Advanced micro devices. Now, this is a tech company with intellectual property. That's the value of this company. It's one of the reasons why you always hear people talk about, AMD is going to get bought out. They're going to get bought out, is for their patents, right? But, they never end up getting bought out. But, these companies with high levels of intellectual property, had the best gaps up this morning and were bought into as this whole U.S. President Trump China stuff. One of the big areas of the negotiations has to do with intellectual property, technological property there. And so we do see the likes of AMD, the likes of Micron, these semiconductor stocks getting a lift here this morning on it, and they're all up to it, varying degree here. So that was one of the areas. We also saw General Electric, who announced they were selling one of their units. I've been watching this all day, and we're just kind of watching it pull on back, and it's one where, okay, it's up at the 200-day moving average again. Yes, it's positive news for them in the short run. Does it make them better longer term? There's a lot of debate. There's a heck of a lot of debate there with that, but that is helping to lift things a little bit, here this morning as well. But, for the majority of things, kind of go look at, there's either this type of action like a Bank of America, which lagged the last couple days and is getting popped up here today, right? This type of laggard playing a little bit of catch up. Or, there is this, there's this element of, hey, there's a nice little bullish breakout off from last week, like on a Micron, but man, is that going to hold? Is that going to hold? And those are two kind of big things. We see the Boeings of the world. It just keeps on going here, right? There's just you know what? Can you go buy it here and probably go up? Yeah. Probably does, right? I mean, that is just the nature of this type of move, it is one where, ultimately, will it have a correction? It sure will, right? It sure will. Everything does, but is that going to be at 450 or 430? 480? Where's that going to be? And that has a lot of market participants scratching their heads. Some of the perma bulls are definitely starting to crow, and rightfully so, a little bit over some of these names. And the perma bears, they still have the same argument. It's still the exact same argument in terms of, hey, the economy is going to get worse and things are going to get worse going forward. But we've talked about some of the data, how it's been emerging, how it's been, how some of it's been weakening, some of it's been okay. But this morning we had a little bit of data. I'll pull it up here. But it was one of these Fed surveys, the Dallas Fed survey. And we saw some some ugliness earlier in last week in some of these Fed surveys in some of the districts, but the Dallas Fed survey came in at 10, came in at 13. Was expected to come in at 4.8, so definitely beat expectations there, showing a pickup in the region. If we come in here to the Chicago area. Chicago National Activity Index, you can see that it came in 3-month moving average is the same, but this thing missed, right? It actually showing some contraction there with the Chicago National Fed Activity Index. We didn't see S&P futures react too aggressively to either of these, but it continues to kind of show that kind of mixed bag worth of data, and it doesn't give the bulls or the bears any more ammunition to fire that they don't already have, and so that is something to be aware of. We will later on this week we're going to get the manufacturing PMI numbers. Now we've already seen the flash numbers for the month of February. We're going to get the final numbers for the month of February. If those are about what the flash numbers were, the market's just going to yawn, snooze, and move on. If there's a dramatic revision there, the market will definitely have a reaction to that, and then we'll get into the ISM manufacturing here at the end of this week. So that's what's on tap here for the markets. We're going into the end of a month, that is traditionally a pullback type month for the market, but has been a very abnormal February, has been a very strong February. To see some selling into the end of the month, would make a lot of sense. But at the same time, it's, there's definitely not something that says, ooh, it has to be. I think if you're bearish, your best argument right now is the China stuff's over. For now. We're not going to have China-U.S. news anytime soon. If you look at all the gaps up and you look at the late-day rallies that came into the market on all of these moves, every single one of them was China news. Trade news between the U.S. and China. Something being said, something being leaked. Well, discussions are halted for the moment. They're still, ongoing and everything, but, the big stuff, halted. We'll have an announcement of when, the Chinese premier and U.S. president will meet. But that thing that has continued to drive the markets higher, that's going to go away this week. That's going to, we're not going to get anything brand new on that. And I think if you're bearish, you look at that and go, okay, well, that's the first kind of relief we have that, the bulls aren't going to get more fodder here, right? And, something that has to be taken into account. Obviously, other things can happen and other things can go on, but, that I think is the bearish argument, that comes into play. That isn't that overbought argument, right? That overbought that it's been for, how long? Great. But you see small caps pushing into new highs. You don't see transports pushing into new highs here today. While the market itself is pushing into new highs, we have seen transports slow down a little over the last several days. But, it's not like we can look over a 30-day period and see any kind of lag. So it's a very short-term, type of element here with the transports. And, bottom line, the bulls still control most of the metrics out there. We haven't, well, here's the bullish percent index here, BPSPX. And you can see, it's just every day it's up half a point to a point. There's just been no sign of stopping or weakening here with the bullish percent index as well. Now, this morning I pulled off my FedEx for the challenge, and yikes. But it pushed above my stop level. I wasn't willing to take it higher than this kind of opening price from Friday, and it broke above that opening price, pushed into 183. I had to go. The chance of it moving up to 185, 186 in the short run were high. I do really like the action on it right now. I really like this action that we're seeing, and I may go step back into it here before the close, as I still think the low 170s are the target destination for this. So, I understand, there's a contingent out there that hate when I get back into something that I got out of, one way or the other. But this is my favorite setup out there, and it is one where, if I use kind of 182 and a half, that might be a little too tight. 183 maybe a little too tight, but I'll take a look as we get closer to the close and see where I want to step in here on that. Now, we also saw oil weakening here this morning on U.S. President Trump's kind of call that, hey, to OPEC saying, hey, careful. And he used this word fragile in terms of the global economy, which I found to be pretty ironic. The fact that, there's all this talk about how great the economy is, great, grand, and wonderful over the last little bit. And, he used the term, it's fragile. And when speaking to oil, and we know, he'll go from one extreme to another very quickly, right, in the political rhetoric. But it was very interesting to hear that, and we saw oil snap on down. But a lot of the energy names, right, like a Halliburton, made a move higher. Made a nice little push on higher here. You can see on the daily chart, this is one that, kind of last week had that bullish move, and then, into the next end of last week, kind of broke those lows. I was looking at it for a put position, said, no, not yet. Today, small gap down, but, bought up overall. So it's not really creating a directional environment, still in a ping pong type of environment, and a lot of those out there, in the market today. A lot of stuff like an IBM that has hit the upper band. Instead of, it's paused there for a day or two, but instead of weakening off that level, it has continued to see, some minor strength off of that level. Capital One, kind of same thing. It weakened for 2 days and then strengthening here today. So, even the bears, when they have something out there and they're starting to get some of these bearish setups, they're not getting the follow through to them, that the bears are used to on these setups. And, for me, for the challenge, that kind of keeps me on my hands just a little bit. I get a perfect setup. I will definitely go after it and, be aggressive here with them. But ideally, I'd like to be comfortable that, hey, maybe the market's topped out at least a little bit and can go play some of these laggards that are out there. Some of these some of these companies that really, there's zero reason for them to have rallied. It is very much a market element. For example, a FedEx, square in that area for me. But even a Twitter, but, so far just haven't had the, don't have the setups. Had a few of the setups like on Twitter last week, but bulls came in and bought those up, and I'll wait for my next little round of setups. There's FedEx is still my favorite out there, but it's one of those where You start looking at a Honeywell, you start looking at a Boeing, you start looking at a UTX, and the magnitude of overbought that's within this area, becomes a little tempting. I priced out some SPY put spreads for the challenge, down here in this kind of 267, 268 area. And I may take $300 from the challenge and put it into a debit spread down to this level. Now, normally I don't do debit spreads for the challenge, but if I could pick one of these up here for 10 to 12 cents and have the reward potential be essentially a dollar, more realistically 80 cents to 85 cents, I'm looking at that. It's not compelling enough yet to me, but that is something that if I do make that kind of trade, I will do it live on video and show you the legs and everything else and how that how that works. But anyway, that's those are some of the things I'm looking at. Again, there's no change in the dynamics here today. There could be, I do think, a gap down tomorrow. Could be sold aggressively, and perhaps very, very aggressively. And, it's one where I look and I go, okay, do I wait till tomorrow? If it gaps down, I'm going to pay a little bit more, but my chance of being right is significantly elevated. If I go jump in now, it's going to feel good on a gap down, but the chance of that happening, still isn't highly in my favor. So how do I want to kind of manage that? And that's what I'll have to ask myself for the challenge, here going into the close here of the market today. But there's most of the things they're in kind of one of a few positions, and just very similar. Here's Johnson & Johnson. Yeah, that's what Micron looks like, right? And so that's that's kind of what we're seeing out there in the market, right now. Deere and Cap pushing into new short-term highs here, but also quite extended, here in the short run. So that's kind of where things are. That's kind of how I'm looking at things. And I look, I don't want to dissuade anyone from being bullish because that's where the metrics are. But the way that I'm going to go about the beginning of this challenge, is looking for those bearish opportunities and looking to step in aggressively when they emerge. That might be me get whipsawed out of a few things in the short run, but overall I think it's going to be the most profitable strategy as we go forward here throughout the end of this month and through about the first 2 to 3 weeks of next month. Okay. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.